Live. Awesome. Good evening. Good evening. Welcome to Master Your Money with Eric Anderson. Those of you tuning in, let us know you can hear us, that you're there. Give a few more minutes and wait for everybody to hop on as it goes through all the streaming channels. All right, I can see it now. Yeah, awesome. While we wait on everyone to hop in, Eric, you want to give us a little rundown on how's your week been so far while we wait for other folks to hop on in this evening?
So, as we were talking about earlier, I know as most people know, tax season doesn't officially start till Monday as far as the IRS being open. But if you are legitimate with legitimate software, some of your software will let you start before then. So I've already had plenty of clients up to now that we've already filed their returns. Um, Obviously, the e-filing and all that stuff doesn't start till after January 26th, but we are actually able to file, and it has already been a very, very interesting tax season. Can I
Do
vent?
tell.
So, if you did or did not read the article today from the Financial Turtle, the things that I said in the article are real. There are plenty of people who are coming to me who have previous year's taxes. So let me tell you how I operate. If it is my first year with you doing your taxes, I definitely ask for last year's return because I definitely want to kind of see what you usually do as far as your businesses, your W 2s, all of that stuff. And it gives me an opportunity to kind of go over last year's return with you because believe it or not, so many people say that the person who did their return the year before does not go over the return with them. They just call them up, tell them, hey, this is what you owe, this is what you're getting back. And usually people are very excited because they're getting huge, huge returns, like you're seeing on social media of all these people dancing, twerking, doing all their thing, tell you they can get you these huge returns. And usually that is when I go through the return with them and explain why it's not the celebration that you think it is, as far as you getting all this money back and stuff, because the person who did your return is usually committing some type of fraud. They're either creating businesses on your return, or they have businesses where you are showing far more expenses than you thought you gave them to get you these huge, huge losses on your Schedule C in order to bring your AGI down. The big thing that you see nowadays, when you see everybody on social media who claims they do taxes, bragging about how if you have this many kids, if you have one kid, I can get you this much back. If you have two kids, I can get you this much back. You have three kids, I can get you this much back. It's because they're putting you inside of the limits in order to get the earned income credit. And the way that they do that, if I'm making 60, 70, 80, $90,000 at my job, or even more than that, they create businesses and show those businesses as negative to then bring your AGI down to be able to put you in those slots in order to get the earned income credit. And the way they're able to pull it off, like I said, is they do not show you your return. I even have people who bring me past year's returns and it does not have the Schedule C in the packet for the return because they know if you took it to somebody, they would look at the Schedule C and say, why on earth are you showing that you have a business or showing that you have all these losses? But again, anybody who knows how to do taxes can see on the first page where it says other income it shows the negative number. So you might as well show the Schedule C, but you just think that the person isn't going to look at the return or see the Schedule C to see it. But anybody who knows how to do taxes can go right to the line for other income and see the negative number. The other scam is putting everything on your Schedule A as far as a huge amount of medical expenses or whatever, and that brings your taxable income down. So when your taxable income goes down, then obviously it's a lower tax liability for you, which again would save you money on your taxes. I've seen people do things like fuel credits, all kinds of crazy things on people's returns. And then, like I said, when these people get these letters, I have to go to the IRS with them because the person who did the return prior will not go to the IRS with them to try to get this resolved with the IRS. So again, today is January 22nd, and I've already had about 5 or 10 of those type of returns.
Wow.
So, and again,
Wow.
it's tragic because again, I say all the time, it's like shoplifting. So if I go out and I shoplift today and I get away with it, I think I'm fine. But if I keep on shoplifting, I'm going to eventually get caught. And the worst part about it is if I go shoplift and leave the store, I might think that I'm good. When I'm doing my taxes, the IRS can pull up and audit me anytime they want. So I've seen clients actually get the money and then they get audited later on, which is worse because if I get the money and then I get audited and I got to give that money back, most of the people don't have that money, right?
Right.
Because they went out and blew it. They went on a cruise, they went and bought a car, they did all these things with that money that really wasn't their money. And now they got to pay it back with interest. And in many cases, penalties, unless you can somehow get somebody to go there and represent you and try to get the IRS to understand that you had no idea that the person who did your tax returns was doing this fraud on your return. So, and the worst part is, I tell people all the time, first of all, if you see somebody doing social media, you never see me do a social media post saying, I can get you more money than anybody else or stuff like that. That is an automatic red flag. You never see me say that. I've never said that, have I? I never say, oh, I get everybody the biggest return and all that stuff. That should be a red flag to you because that means I'm probably going to try to do something fraud, illegal like, or whatever. And people can say, I know what I'm talking about, but I'm the one catching these returns. I'm the one getting these returns and having to show these people why you got $15,000, $20,000 back last year, and this year you're only getting back $5,000. And you think I don't know what I'm talking about until I show you why. And I show you the business that's on your return, the catering business or the event planner business or whatever that showed a $60,000 loss. And you're looking at me like I'm not an event planner, and I pull out the Schedule C and show it to you. Or I show you the line that on the other income for that negative number. But everybody does taxes now.
Well, it sounds like
that everybody does taxes now.
It sounds like you had an eventful.
It can be very stressful because you just shake your head. You're like, why are you people falling for this? It's almost the same thing like all these people who are going to jail now for the PPP stuff, for the EIDL stuff. I think we've had this conversation where I said people were coming in here saying this person got me way more money for the PPP loan than you can get me. And then I say, can you show me the Schedule C that they're turning in? That's not the Schedule C that you turned in to do your taxes. And you just shrug your shoulders and you're like, well, it's going to be all good. Go on YouTube, everybody. Look at all these people getting arrested.
Yeah.
Look at all these people getting arrested. So how do I not know what I'm talking about? If all these people are getting arrested.
Man. Well, hopefully you don't have to. I mean, I guess by chance, if you can count, how many times did you have to go into the IRS or have to do anything this past 2025 year? How many times did you have to go back in there or engage in that?
It was between 5 and 10 clients.
10 clients?
And it's usually that every year. And they're not my clients. They're not my original clients.
You had 10 clients that came in after someone else filed their taxes.
And so we're clear, it's not just your personal taxes. I've had to actually go to the IRS for people who someone scammed and got them the ERC credit. We all know what the ERC credit is, right?
Mhm.
That's the one where they were giving you the money back for your payroll taxes.
Mhm.
So people were having people say that you had all this payroll, so you filed for the ERC credit, and then you get the letter, and then the person calls me and they're saying the person who did it is saying they're too busy or won't return my phone calls, and they're like, the IRS is asking me um, to bring in my 941 forms and my pay stubs to back it up. And I say, do you have payroll? And they're like, no, it's just the mom and pops. We're just 1099 and everybody, or no, we're not paying anybody. You're in trouble. What are you talking about? The person who did, they created 941s saying that you have all this payroll. So I've had to actually go to the IRS and amend 941s and say that there was no payroll. And
Wow.
fortunately, sometimes these, like I said, fortunately, sometimes they don't give you the money. They want you to prove it before they give you the money, which is a good thing. Because if you get the money first, then you got to pay all that money back again with the interest and the penalties.
Man.
Same thing with the PPP. As you see, if you see the articles and stuff, they've hired companies now to go after people who got the EIDL, all the people who are applying for SBA loans. Again, I know people are going to get mad when you see all these videos on TikTok and stuff. I can get you $150,000, $200,000 in SBA loans in hours, even if you don't have a business. And we fall for it.
Right.
And we fall for it. And then you see the videos of all these people getting arrested.
Yeah.
But again, you believe the risk is worth the reward. So
Yeah.
you believe that again, we can all walk out here and go shoplift. Everybody's not going to get caught.
Right. Right.
But what if you're the one who's caught?
Right. Wow, man.
Are
That's
you are
been,
you willing to take that risk?
yeah.
And again, like we were joking around before we got on, like I said, I know of tax preparers and stuff like that who have got caught up because you're so busy doing it. And
Mhm.
then they do the sting, so much, so to speak, where they come in here and they set you up.
Man. That's
And
crazy.
that's why I always laugh because I'm like, yeah, no, we don't do anything illegal here, so I'm not worried about it.
Right. Right. Well,
I'm
hope
not
we
just,
don't
I'm not
get
just
they don't set up a sting or nothing like that. That's crazy. They'll just set
I
up a
don't just
sting. They
create
try to catch.
businesses or do fuel credits or
Yeah.
say, you've had 10 surgeries to get this huge medical expense. And
Yeah.
we don't do that here. We just, if
Yeah.
you say you have a business, you bring me your numbers and all that.
Yeah.
Businesses legitimately have losses. I'm not saying that you can't have a business that has losses, but when you come in here and I say, oh, you're an event planner and you took $50,000 of losses last year, and you're looking at me like, what the hell are you talking about? That's different than
Yeah.
somebody who's starting a business and they took a loss.
Yeah. That's wild, man. That's wild. Man. And I know today, those of you tuning in right now, I know the topic. I know we were just kind of letting on folks getting on in here. We're just kind of recapping the week. And just with Eric, I know Eric, we got the amazing topic today. And how to grow your income and personal net worth, you guys. So that's what today's topic is. And if you have any questions in regarding that, and if you have any questions regarding your income, personal net worth, what does that look like? You can say, well, you can make more money, but you still feel stuck, right? You get raises, you get bonuses, you have some side income and still feel like just nothing is really changing in your life. So tonight isn't just about, I know Eric was talking about about height or getting rich quick or scams or anything like that. It's about what actually works over time, right? Like what actually works. How do we help you get to that next level or next step that in your financial journey? So Eric, take it away. And where are you taking us today on how do we need to go to grow our income and our personal net worth? What does that look like? Break that down for us.
So for me, I'll use myself as an example. Great, as an example. So if I said I wanted to build my annual income How do I do that?
Hmm.
What do I think that I would invest in order to help me build my annual income? What would you think the first thing that you should do?
First, I would need to have some income coming in for me
Correct.
to build something, right?
So for me, it would be more of what I invest in myself.
Oh, wow. Okay.
So I'd make myself more profitable. I'd make myself more, I'd build myself up. I'd give myself more skills. I'd make myself more profitable, so to speak, in that regard. So I'd go to school, I'd get degrees, I'd learn how to do other things, side hustles and things like that to help me make more money. Correct? If I'm
Yeah.
making a certain amount of money at a job and I want to make more income, and I believe in order to get a promotion, I need to go get that degree or go get that certificate or whatever I need to do in order to give myself a raise. That is the easiest way to grow your net worth. Is definitely, I like to call it growing your shovel. So the more income I make, the bigger my shovel is. That gives me the ability to not only save more money, invest more money, bring down my debt, and all those things that I'm talking about all roll into being able to grow my net worth. So definitely, I would look into growing myself and making more income. When I say myself personally, as an example of that, many people do or do not know. I worked at some accounting firms before I started my own business, and I felt I was not making enough money at those jobs to be able to maintain the lifestyle I wanted to live. And I felt I was being underpaid. We can argue all day. Someone can come on here and say, no, you're being paid exactly what you need to be paid. I would beg to differ if I now have my own business and I'm good, correct? I took a chance on myself. I went and got the degrees and um, started working somewhere to get my securities licenses, to get my group one, all the different types of things that gave me the ability to make all types of different income streams from all of the certificates and degrees and licenses and everything that I have in order to be able to do all the things I can do in my business, correct? So I invested in myself to now grow my business to make much more money than I was making working for somebody. So that would definitely step one on how to grow as far as making more income and building my personal wealth. That is definitely step number one.
That's great. That's really good. I mean, would you recommend any books, or whether any books or anything that like helped you or you would recommend to kind of read to in your journey that has helped you to be able to just kind of invest in yourself, so to speak?
So it's interesting as we talk a lot about people starting business. Some we were talking about today about somebody who's really struggling in a business. It's really tough when you quit your job or whatever to follow your passion. And
Hmm.
a person we're talking about, we're seeing that struggle happen right in front of us. And that's really sad because a lot of people believe that you're supposed to just follow your passion. And if you follow your passion, you're going to be successful at it and you're going to be great. I know Steve Harvey tells you to just leap and do all of this and that. You know, he tells you the whole story, and you need to understand the whole story of his struggle till he got to where he is today. If you can make it through all of that, that's great. But most people don't understand. Even myself, it was a struggle to get to where I'm at. I don't even think I'm great right now, but to get from where I started, it was really a struggle to get where I'm at today. A lot of people think you can just quit your job and start a business, or you can start this side hustle, especially if you think you're passionate about what you want to do. You think you're automatically going to be successful at it. Um, as you can see, a lot of times that's really not the case. So, but you do need to be proficient in what you're doing. You need to be. I like to think that I'm successful. Nope, not true. Yep, she's correct. Yep, something you're passionate about. It doesn't mean you're always going to be successful at it. So, yep, I was getting ready to say that. So the second step, like she's saying, is definitely investing. I tell people all the time, um, once you get to a certain amount of money in investments, as far as like your 401k, your IRA, and stuff like that, I tell people all the time, If I have enough money in those type of accounts and things like that, I'm basically giving myself a raise every year, correct? If I have $100,000 in the S&P 500 and the S&P 500 is trugging along, giving me 10 to 12% a year, what's 10 to 12% of 100,000? It's not rhetorical, brother.
Oh,
I'll play it with you. I'll play it with you. But think about that. I'm giving myself a $10,000 to $12,000 a year raise every year, right?
10,000. Yeah, 10,000.
If I'm
10 to
investing,
12,000.
right?
Yeah.
So when you see people who have money and they don't have the tools, it's very hard. You don't know what you know. Yep, that's correct. Very true. But if you just have money sitting in a savings account, or if you're not investing in your 401k, or you don't have an IRA or a brokerage account or anything like that, you are really missing out on a very good opportunity to grow your money as well. This is passive income, basically. It's growing on its own. Everybody understands how compound interest, time value money, and all those things work. That is definitely another way of growing your net worth. Correct?
Yeah.
Another way is then that's when we start talking about things like side hustles, things like that, to try to create other streams of income, be it a business, be it some type of contract work, be it another job. And again, even if I just take that job for a little while in order to get myself out of debt. So let's say I say I'm going to take all of 2026 and I'm going to get this part-time job in order to pay off all my credit card debt or to pay off my car loan and stuff like that. It's great that you do all of that, but then what happens if I only do that for a year, but I've paid off all my debt? Now what?
Yeah.
Now what? Now I have all this money to invest,
Yeah.
right? All the money that I was paying my debt with, that I was spending all my money to pay all this debt with, now I can take that money and I can start investing. Which
Absolutely.
again, like I just said, is now basically giving me a raise if I'm taking that money and investing it correctly in things that are giving me a rate of return.
Right.
So
Right.
there's other things that people do, like getting real estate, having rental properties, starting a business and things like that to help you grow your income, revenue, profit, whatever words you want to use, building up your net worth. Owning a home helps you build up your net worth. I know you see so many videos out here talking about how owning a home is a bad investment and all types of things like that. I think we've already done a video about that, talking about the difference between owning a home and renting. It all depends on your situation and what you do.
Right.
If I own rental property, I damn sure better be taking the money that you're telling me I'd be throwing away by owning a home as opposed to rent. I better be taking that money that I'm not using to fix up my home and things like that because you claim I'm paying so much less money by renting. I better be investing it.
Right.
Because 30 years from now, I'm gonna be renting and have no equity. So I better be taking that money and investing it as opposed to the person who owns the home. And we talk about all the money that I've spent on that home, but I still have the equity in that home. I can
Right.
still sell that home. Correct?
Correct.
I have no problem with somebody saying they're renting as opposed to owning if they are taking that money and investing. But if you're just renting and blowing the money, 30 years from now, you'll have nothing. Correct? 30
Correct.
years from now, I'll have my home. I'll have the equity in the home. And then if you want to talk about taking that equity to go start a business, go buy more rental property, the different things that people do with the equity in the home, again, that's a whole different subject. But
Yeah.
again, today we're talking about building our net worth and things like that, right?
Yeah. Yeah.
Those
Yes. Just to take a little
Yep.
pause on that. I know folks who are joining us right now. This is great. Those of you joining us right now tonight, we're talking about how to grow your income and your personal net worth. So breaking down what that is, what that income, how to increase your income and your personal net worth. So if you had any questions or anything, please drop them in the chat. If you have anything at all, please drop it in the chat and let us know if you have any questions.
Yeah, because I can't.
And we'll get to them.
We have any?
Go ahead.
I can't see the question, so if we have any questions, just let me know.
Okay.
Okay.
Yeah, we did have something where some comments in there. People don't understand. That's why we hire Eric.
Thank you.
So Eric, when we talk about like personal net worth, you talked about investing in yourself earlier, right? Investing in yourself. And when we get to like the net worth, when you have a home, right? That is part of your net worth, right? Is that
Oh,
included in the personal net worth, even though it's
oh,
quote debt? Because if it has equity, I know it's tricky, but if we're talking about net worth, right? Personal net worth, then if I own my home and then yet I have equity in my home, and let's say if it's paid off, obviously in 30 years, so as paid off, then I have the equity in the home. I can sell my home. That's an asset, correct? So if
okay.
it's worth
So
300, 500,000,
correct.
I
That's
can
the
do
easiest
something with
way.
that. Hmm?
Correct. So that's the easiest way to put it. So let me put it like this. So let's say I have $50,000 in a checking account, but I have $30,000 in credit card debt. What is my net worth?
You
20,
said
20, 50 minus the
20,
30.
right? Yeah, 50. Yeah, 20, right?
So
Because that's
anybody
the
who knows
debt.
accounting knows assets equal liabilities plus equity. So if I have $50,000 in assets, 30,000 in liabilities, then my equity is 20,000. So I'm worth
20,
$20,000.
right.
So the same thing, if I'm looking at a house, if my house is worth $400,000 and I owe 250, what is the equity in that?
Is that 150, right?
Correct. So if somebody says my house is not an asset, that's not true. It all depends on what the value is on it and what I own on it. Same
Mm-hmm.
thing as a car. Somebody can say a lot of people, it does look bad because a lot of people have cars that they're underwater in, right? But say my car's paid off. So that's an asset,
Right.
correct? So
Yeah.
when I look at my net worth, when I do my net worth, I take the value of the car and there is no liability if my car is paid off. So that's an asset. So that builds up my net worth. And then the same things on my stocks, on my 401ks, IRAs, brokerage accounts, all that stuff is considered assets. And then all the liabilities, any debt I have on my home, any debt I have on cars, any credit cards, any loans, all that stuff. You subtract all of that, and that's what gives you the equity. Again, anybody who's taking accounting, again, assets equal liabilities plus owner's equity. So that's how you get to your net worth. So when you hear people say that your home is an investment, it's not an asset. Not if you look at it from the net worth standpoint. If I'm having to write out what my net worth is on what my net worth is, a lot of people are millionaires because of their home, or millionaires on paper, correct? Because of their
Right.
home. If you look at
Right.
the net worth in your home, that's why so many people are able to say that they're millionaires. So you can't say that your house isn't an asset if that's what makes most people millionaires. And even if somebody said, but it's your home, how's that an asset? We just said I can take equity out of it. We just
Right.
said I can take money out of it.
Mm-hmm.
So that's almost like a cash account in a way, correct?
Okay.
Because I can take cash out of it.
You can take cash out of it.
So
So my net worth, if I have paid off cars, I know cars are very expensive nowadays. They're different, everybody's, it's just so expensive right now. So having a car, so if you have your car paid off, you have a paid off house, right? All this is a part assets that you can sell. You have, it's a part of your value in a
I can
sense,
sell them.
right?
Sell them.
So that's good. That's good. I just want to make sure that that's right. So we can get there if some of us, in depends on you have $400,000 home, you got 30 or 20 to $30,000 cars, right? Paid off. That adds to that. Now, we got probably some other items or other things. We got your 401k, your IRA, your would the HSA kind of include in that too?
Right. If it has cash and stuff like that, if it has the
Okay.
value in it, yeah. So that's why, again, like you said, when you see different people talk, somebody who I listen to all the time, we talk about John Hope Bryant. That's why John Hope Bryant says all the time he gets very frustrated when he sees wealthy people tell people your home is not an asset,
Yeah.
right? You see those videos all the time, and like you see, he'll tell you that is really for most, especially middle class people, that is your biggest asset is your home. That is the thing that gives you the biggest net worth. again, like I said earlier, imagine that 30 years from now, I have a paid off home that's part of my net worth. But if I've been renting all this time, if I don't have a brokerage account or an IRA or 401k or something that has been collecting all this extra money that you claim I'm saving by renting as opposed to owning my home, then obviously that would be part of my net worth, right?
Right,
So
right.
that would take the place of the home. But if I'm not doing those things, I don't have that net worth of my home,
Mm,
right? So a lot of people will not reach $1 million status if they do not have a home unless they're investing. And we know, sadly, most people do not invest, or at least do not invest enough to be able to retire and reach millionaire status and things like that. So,
got some questions in the chat.
yes, sir.
Um, okay, some people rely on Social Security alone. How can retirees combat growing costs to live? Are there safe places to invest aggressively while retired? That's
Nope.
loaded.
And I can answer all of it.
Go ahead, go ahead. That was loaded right there because I was like, there's
No,
folks moving out of their place of retirement where their retirement kind of home is because they
correct.
can't afford
They
where
can't.
they live now, right?
So, and even on that, imagine that. So now I'm retired. I'm living off of Social Security and I'm still paying rent because I did not own my home. So now part of my budget when I'm in retirement is my actual home. What if I own a home? And again, I don't, I'm not here championing it. I'm not saying, oh, you got to do it. But what if I get to that age and I have to do a reverse mortgage?
Mm,
If everybody knows what a reverse mortgage is, what if I have to do that to help me pay my bills and stuff like that? I don't have that option if I've been renting all this time, correct?
right.
And I have not been investing. You definitely, when you get to retirement age, um, that's why baby boomers, right?
Yeah.
That's why they are having such a struggle in retirement right now because most people who are baby boomers are coming out of when our parents were working. What did they have? Pensions.
Yeah. Pensions. Yeah. Yeah.
Pensions, things like that. With us being here in Austin, I have so many clients who are retired teachers, retired military, retired state, right? So a lot of those people have retirement pensions, right? But younger people like ourselves, we're going to be retiring off of our what? Off of our
401k.
401k, off our
Yeah.
IRAs and things like that. So with her question, can most people live off of Social Security? Fortunately, for most older people, if you've retired from the military, retired from the state, retired from the city, retired teacher, or retired from jobs that had pensions, still had pensions back then, not only are you getting Social Security checks, you're also getting retirement checks.
Yeah.
But most people our age, as we're getting to retirement, you're not going to have those type of things. And the sad part about it is, like somebody said, you don't know what you don't know. And it's something you've never experienced. And that is one of the biggest things when I talk to people, when we talk about budgeting and retirement planning and things like that. I always say you need to try to figure out how to be putting more money into your retirement.
Yeah.
It does not seem like a big thing today,
Yeah.
but with time value of money, compound interest, and stuff like that, you want to be putting in as much money as possible as soon as possible. Because, like Amber is saying, you're not going to be able to live off of retirement. I mean, off of Social Security. And then her question on what is the safest things to be investing in, you should be repositioning your portfolio as you get older. If you have an advisor, they're going to be pushing you more into bonds, money markets, and things like that, as opposed to stocks, risky mutual funds, and things like that. You really want to be definitely doing things that are giving you more dividends, um, that aren't aggressive, that's giving you somewhere around 4 to 6% return when you get to retirement. You want to start repositioning your portfolio to start being able to do those type of things, as opposed to when you're younger, you can be a little bit more risky. So because you have more time to be able to recoup those losses. So to speak.
Right, right. You got enough time, to do that.
Correct.
Yeah, yeah, before retirement. We do have a few questions. It's lining
Correct.
up. So thanks everyone for your questions. We're gonna answer some of those right now. Your comment said, but Eric, if your car makes no money and it's paid off, isn't that technically still a liability, gas, maintenance, etc.?
A liability as far as, okay, so if my car is paid off, but I'm having to pay for gas and maintenance and things like that, how do I get around? So I'd rather pay Uber, pay for the bus and things like that as opposed to a car note. Because otherwise, if I say I don't need to do those things, then I would just be walking, right? It's a liability it's not a liability. Let me rephrase that. It's not a liability. So let's do it from an accounting standpoint. What's an asset? What's the liability? What's revenue and what's expense? The easiest way to put that is expenses go on what? Accounting today. Expenses go on my profit and loss statement. Liabilities go on my balance sheet. Correct?
Yeah.
You've taken accounting before, right?
Yeah, a little bit.
So those are expenses. My car, the expenses that he's saying, those are expenses on my profit and loss statement.
Right.
They're not liabilities.
They're not liabilities.
A liability is the car note.
The car note. But if it's paid off, it's not.
It's not a liability. Remember, net worth.
Right. Yeah.
Asset equal liabilities, equity. So it's not a liability, it's an expense. So again, it's worded differently, but it's not considered a liability. It's considered an expense. I understand what he's saying, but it's not a liability, it's an expense.
Because some people will say it's a liability, right? Like they'll be, they'll consider like, oh, if I'm paying for the car and I owe $50,000 on my car,
liability. Then it's a liability. I'm paying the note, right?
Right.
The note is a liability. Liabilities go on the balance sheet. Expenses go on the profit and loss statement.
I got it. I got another question for Roger. Say, if I have assets in an estate trust, then how is my net worth calculated?
It would go through that trust. Again, if you're saying that's part of your personal net worth, then it would be the same thing. But if it's in a trust that you're not going to be able to touch or use, then it's not part of your personal net worth. If it's in the trust to leave it to somebody else, I wouldn't consider it my personal net worth.
Okay.
That's just me, though. That's just me. So it still is an asset. If I want to say the trust is part of my net worth, but if I'm saying the trust is completely out of my personal net worth, then
Okay. Got another question. What advice can you give regarding taking from your 401k to pay for your child's college rather than taking a loan? That's a good one. I know a lot of parents do that. So that's why they do. I know it's sad to like to take out of your 401k, but it's like, do you take out a loan? Because they have the parent where the parent has to basically pay off this note. I'm holding this note, whatever. And do you take it out of 401k? Then I not retire, and then they go off and leave you with the bill, right?
You mean your 401k in the sense of a loan? So the 401k that's sitting in my job that I'm taking on a loan? And the reason I'm asking that, everybody knows if I take out a loan on my 401k, that's not a taxable event, correct? So me talking about taking money out of my 401k and having to pay the taxes on it and things like that, that does not apply, correct? If I'm taking a loan, I'm just having to pay the interest back. But it still is hindering that money that's growing, right? If the money is sitting in the account, then that money is growing, in the mutual funds or whatever, thing like that. So if you're saying like I have a 401k that I've rolled over into an IRA because I don't work there anymore, and now I'm taking the money out of the IRA, now that's the discussion of the tax part of it, right? Depending on how old I am and stuff like that, and the penalties and taking it out and things like that. So that's something to consider between the two. If I'm sitting at a job and I take the money out and that's not a taxable event, we all know that, right? If I just take a loan out at my job, I take money out of the 401k, that's not a taxable event. I just have to pay the interest back on that.
You pay the interest, yeah.
But a lot of people get caught up when I quit the job, get fired from the job or whatever. Then what happens if I still have that loan? It becomes a 1099-R, and now I got to pay the taxes.
I got to pay that. Yeah.
Within a certain amount of time. So for me, I probably wouldn't do it just because of the fact that I would want that money to sit in there and continue to grow as far as being in the retirement account and doing the retirement thing with it. But a lot of that would also depend on what the loan amount is and stuff like that on the college and things like that as well.
And also it depends on what the age is, the 529 plan, right?
Correct. So there are different types of things you could do as well.
529. Yeah. I think we got some other questions come on here. All right, this is pretty long. Let me see.
So at least that you can, I read it.
Got it.
I read it. So at least that you can invest in. I've seen people start as low as $5 to $25. I don't have a Robinhood account. I still have one, but I don't put money into it anymore. I've seen people who do Robinhood accounts, Acorns. I even seen when I help people with their bank statements and stuff like that, I've seen people do something called Save As You Go. Have you heard of that?
Mm-hmm.
It's where they actually put like change and everything like that, and they put it into an account that starts investing, kind of like Acorns and stuff like that. I always tell people, though, I would really try to pay off all my debt first before I start investing. I would definitely, if I'm working at a job, I would definitely do at the absolute minimum whatever the match is at your job, because that's free money. So I would not tell anybody not to do the match at your job to get the free money from your job. But I would definitely build up an emergency fund, build up a savings account, and try to pay off a whole bunch of high interest debt first before I really started digging deep into investing. And that kind of goes back to what I said before, getting a second job, all the types of things we talked about, growing your shovel in order to eliminate all your debt. Because once you eliminate all your debt, now I have all this extra money to be able to start investing. So people are so anxious to start doing Bitcoin, doing crypto, doing all these type of things. And again, that's fine. But you also have to understand, it kind of makes no sense for me to invest in the S&P 500 that's giving me a 10% return, and I have credit cards that I'm paying 25 to 29% on. It's kind of hustling backwards, right?
Right.
That kind of doesn't make any sense. So you should definitely pay all your debt off and all those things first before you really start investing. If any type of investing I would be doing my 401k at work that's giving me the match. Once I'm doing that, I would definitely try to attack all my debt. And again, if I wanted to start investing as quick as possible, that's what I'm saying. I would grow my shovel. I would go get a second job, do some type of contract work or something like that, to say, hey, I'm going to knock out all this debt as quickly as possible. Because if I'm snowballing all my debt, that then frees up all this money to start investing. And then once I do that, I would either up the 401k that I'm doing at my job to up it to 10, 15%. If you want to invest in something else, I would open up an IRA. I would do brokerage accounts. If you want to, there's different types of things. You don't have to have a whole lot of money if you want to invest in real estate. I do REITs myself. I have a brokerage account that I do REITs, so I don't own any real estate property. There's things like Realty Mogul, all kinds of things like that you can be doing that does not cost you a lot of money to actually get you into real estate, if that's something that you want to do besides owning rental property. But get yourself out of debt first. That's most important. Definitely get yourself out of debt first.
Eric, I really like that, because I know that the debt, it also obviously there's a lot of benefits to that, right? Peace of mind. You got some space and some room that you can kind of move, and you have, once you pay off your debt, you have that money that's still coming in, hopefully, that you still put and invest in other areas, because you're accumulating some of that for your shovel. You said building your shovel, so now you have a little bit more room, you got a little bit more space, so you can invest in those places, and those other spaces, as far as like you're more in your 401k, and open up your Roth IRA if you would like to, and put it in other places that can be able to grow and give you a little bit more than in your savings account, right?
Correct. But again, definitely make sure you have an emergency fund in a savings account, because you definitely do not want to be in a situation where I'm having to take money out of my 401k. I'm having to borrow money out of my 401k. I'm having to dip into my IRA and things like that. You really don't want to do that, especially again, it's stopping growth. And depending on what you have it in, you can end up having to pay penalties if you're under a certain age for taking that money out. So you definitely want to, even if you don't got to just have it in the savings account. You can have like my emergency fund is in a money market account and a high yield savings account. So don't just have it like in a regular savings account. If have your emergency fund in something that's giving you a little bit more of a return. I know like my money market account, my American Express is giving my high yield savings account, excuse me, is giving like I think it's 3.44% or something like that. It doesn't sound like a lot, but it's better than just leaving it in your checking account or leaving it in your savings account.
Yeah.
And again, I can go take that money out and there's no penalty for me taking it out.
Yeah.
It was in a
It's not in
CD.
a CD. It's not in a CD or anything like that.
Or if it was sitting in an IRA or something like that, where I'd have to worry about paying penalties because I'm not 59 and a half and things like that. You definitely need to build up a money market account, an emergency fund, and things like that in case emergencies and things like that happen. And then once you have that built up, then again, that's when you can really start attacking your debt and start attacking doing investing. So how do 401ks work for entrepreneurs? Any different? So if I'm an entrepreneur, again, I'll use myself as an example. I'm considered an entrepreneur, but I'm actually an employee for this question. I'm actually an employee of my business. My business is an S corp. I pay myself a salary, and I have what's called a solo 401k in my business. So my business puts money into the 401k coming out of my check, just like anybody else working at a regular job. And my company does a company match, just like, well, it doesn't even do a company match. It does a employer contribution, which is more than an employer match. I can put more than an employer match into that, but that's what entrepreneurs do. But again, the caveat to that, while we're joking around, is obviously you have to be profitable because you can only put a contribution up to 20 to 25% of whatever the profit is of your business. The same thing if I'm just an LLC, I can do what's called a SEP IRA. But again, that's 20 to 25% of whatever the profit is of your business. So a lot of people don't end up doing these type of things because again, you're so focused on not paying taxes at all. So you want to run around and show a business that makes no money as opposed to strategically thinking about how do I grow my wealth? How am I building this generational wealth and everything that people are talking about? So instead of going buying a bunch of things to be able to say I'm writing it off and not paying any taxes, I pay myself a salary and I max out my solo 401k. Correct. So that's
24,000, right? That's the 24. Is it the same from a regular 401k?
Yes, solo,
the same?
And again, like I say, but then the employer contribution can do up to like 70. You can do up to like 72,000.
Whoa, really?
Yep. You guys can look that up. Correct. That's what I'm saying.
But it's only if you're paying yourself a salary in your business.
You're paying yourself a salary and you're showing profit.
So correct. I can't do that if I have a W-2. Right? Like I can't like
and all that stuff, yeah. But yeah, usually the 401k matches that. Correct.
So I mean that's what I'm saying. It's like
23.5, correct.
So it's a 23.5, right?
And whatever the employer matches.
And that's it for the regular.
You don't have a business that you're showing the profit in order to do that. But I have a business profit. Yeah, because again, it has to be 20 to 25% of that profit.
So if you're making 150,000 and you're paying your, self as far as in your business, you can put up to quote 70,000 in your solo 401k, right? The SEP IRA.
Like everyone says, and so like they say at church, please look this up. Don't just take my word.
Let's say fact check it, right?
Please fact check it. Correct.
Okay, because I'm like, that's new news to me because I guess I heard it a little bit differently, but that's good. I didn't know you can do all that. No wonder some of the folks who do have businesses are able
but that's why I told you I write like a check.
Yeah.
About my taxes, I write my company writes a check as a benefit into my business. So I have money taken out of my check every month, like as an employee. It goes into my 401k. And then at the end of the year, I write a check out of my business and it goes into my solo 401k, and it's considered an employer contribution, and it's a write-off from my business. Just like how your business is writing off the employer match.
Wow. So this
So
will
there
actually go
benefits,
to you.
yeah, there are benefits to owning a business. When people talk about the benefits of owning a business, yeah, there are benefits of owning a business, correct?
Wow. So you can get to that, you could get to, like, if you're saving 100,000, kind of putting away $100,000 each year.
You're giving yourself the raise that I'm talking
I
about.
was just saying, I was like, you think about the compounding interest on all the different accounts, with that growing, you're already a millionaire. Like that's, in some
Correct.
years, like by 20 years,
Correct. Eventually, correct.
you're there. So,
But again,
wow.
we're so busy saying we went to Disneyland to not pay taxes. We bought this. Come on, Isaac. We bought this to not pay taxes. That's what I'm saying. The thing we were talking about earlier about people coming here with these scam businesses and writing everything off to get these used tax returns
Yeah.
and stuff, instead of thinking from the mindset of how do I grow? How do I grow my business? How do I grow my net worth? When someone sits down and says, hey, you have this business, turn it into an S corp, pay yourself a salary, yeah, you got to pay taxes like anybody else and stuff like that. But if you have a solo 401k, if you're doing the employer contribution, if you're doing all these things, you're growing your business, you're growing your net worth. But we are so focused on this person is getting, again, if you were not here the first 10 minutes of this podcast, like I said, I've already dealt with 5-10 people, and it's not even tax season yet, who've come in, and the big thing is I got $15,000-$20,000 tax returns last year. Then we look at your tax return, yeah, because they're saying you make no money. And then they're the same people who want to go buy a house, growing my net worth. I can't go buy a house because I have tax returns that show I make no money.
Because you didn't want to pay taxes.
Can I say that again? I can't buy a house because I have a job where I make $120,000 a year, but I have some fraud nonsense on my tax return showing I have a fake business that took a $60,000, $70,000 loss in order to bring my $100,000 down to $30,000, $40,000 in order for me to qualify for the earned income credit to get this huge tax return. And we're dancing and twerking and acting a fool on social media like you're getting over. But then we can't understand why we are not growing, why we have no net worth. The very question you asked me, why we have no net worth. You can get mad at that statement all you want, but tell me the lie. Tell me the lie. You're celebrating that somebody is getting you this huge. Go on TikTok right now and watch all these scam tax people who are doing that. And you think that's great because you got this huge tax return, but then you come back 6 months later and say, Eric, I got to amend my tax return because I'm trying to get a house. Or Eric, I got to amend my tax return because I'm trying to go buy rental property. Isn't that what happens?
Yeah.
We were talking about it right before we got on this podcast. But then we can't understand how we don't grow net worth, how we don't get generational wealth. You think it's great to get a $10,000, $15,000 tax return, but on paper, you're nothing. On paper, you have no net worth. You have nothing. You don't have the ability to go do anything because you're too busy doing tax returns showing you don't make any money.
Woo, that hurt.
But that's what we do. That's what we do, right? So we get to sit here all day long and laugh at all these people who claim they do tax returns. And then, like I said, what did I say right before we got on? It's not even January 26th yet. And I've done at least 10 returns of people who've come to me. This is their first year, and we're going over prior year returns, and I'm seeing this nonsense on the returns. Did you know you were an event planner? What are you talking about? You have a Schedule C saying you were an event planner last year, and your event planning business took a $60,000 loss. What are you talking about? Okay, I can show you. That's why you got $15,000 return. Or they find out when they get ready to go buy a house and they hand the lender the W-2. And they say, okay, we just need to see your tax returns. What does the lender say? You got to amend your returns, which means you got to give all that money back. And Jesse, that's only if you have kids. You should not be getting the tax return if you do not have kids to get the child tax credit. Getting a tax return with no kids is no flex. That is not a flex. That is loaning the IRS money. That means if you are legitimate, that means that your W-4 is incorrect. If you are getting a tax return and you don't have kids, you are giving the government money. I'm sorry, you're loaning the government money. They're just giving it back to you when you do your tax return. The only people out here who should be getting tax returns are people with kids because of the child tax credit. Or if you're somebody who makes under a certain amount of money and you get the earned income credit. But if you come in here and you sit down and you make $150,000 a year and you walking out of here getting a $15,000 return, something is wrong. I don't have to lie, Isaac. All right. I don't have to lie. I've been doing taxes for 20 some odd years. I don't have to lie. I've seen everything. I've seen everything.
That's wild, man. This is
and the sad part, like she's saying, they think that they're helping people until you get audited or until you're trying to buy a house.
Yeah.
Or you're trying to get a business loan or you're trying to go buy rental property. You think it's great that you're getting these returns until you try to build your wealth.
Right.
And then on paper, it looks like you don't make any money at all. But you say, but I make all this money on my W-2. But but according to your tax return, you're taking all the money from your W-2 to finance this business that's making no money.
Yeah.
That's your tax return. That's a tax return you're showing us. Yeah. You're showing that you're taking all your money to finance this business that's making no money.
You hurt my feelings in some other areas. Thank you, sir. We've all made some financial mistakes and things we should not have done. So this has been great, Eric. I know we're wrapping up on our time. For those of you,
it goes so fast. It goes so fast.
It goes so fast. If you have any questions, we'll be on for a few more minutes. But if you have any questions, please drop them in the chat. Let us know. Hopefully, we get to them. But Eric, could you recap this whole session for today, just so like we know what we need to do, how we need to move forward on taking responsibility on our wealth, our income, our personal net worth? Could you just break that down and give us some tools that we can run with?
I'll do two things. So I'll do that. I'll say definitely, like I said, invest in yourself, learn to budget, set goals for 3 months, 6 months, a year, 5 years, 10 years, 20 years from now. Where do you envision yourself financially? And think about how you're going to get there. Don't just say, I want to be a millionaire in 20 years. I see people come in here all the time and say, I want to retire at 50. And when you say, how do you plan on doing it? They have absolutely no clue. No clue. Remember we went to the thing and the kid who was working at HEB said, I'm going to be retired at 35. And everybody started laughing. And then the person was like, why are you laughing at the person? Because I guarantee you, he can't tell you how he's going to do it.
Yeah.
I guarantee you, he can't tell you how he's going to do it. He's just watching people on social media tell you that they're retired at 35, retired at 40, whatever, and you believe it. If you can tell me how you plan, it's like when we come in here and we talk, like I say to people all the time, people say, I have people all the time who say, I don't believe in 401ks. I don't believe in IRAs. I don't believe in the stock market. You see the Grant Cardones and the people like that tell you you're a fool if you own a home, all kinds of things like that.
Yeah.
Cool. If you don't believe in those things, can you articulate to me how you plan on retiring? If you don't plan on retiring with the 401k or owning property or whatever, how do you plan on retiring? If you can articulate, and not just to me, if you can actually put on paper and explain to yourself how that's going to work out for you, then great. But most people do not have a plan. Lastly, real quick, I know it's tax season, and I know I might have hurt some people's feelings who are not actually my clients, who have gone to people and things like that. And now you're feeling a certain type of way because, like I told you, I've had people who've actually come in here and are upset because they're not getting $15,000 back. Because again, we don't do that here. So if you're somebody who's used to getting huge returns like that, and now I'm saying things that are really and truly making you think, how am I getting these type of returns and things like that, especially if I don't have any kids, or if I'm a W-2 and I'm make very, very decent money. So how is it possible that I'm getting the earned income credit if I have even if I have kids? How is it possible if I make 70, 80, $90,000? How on earth am I still able to get the earned income credit? I just unlocked it for you. If you go look at your return, and the sad part is, so many people say to me, they didn't walk me through the return. They didn't show me that. And like I said earlier, a lot of times they'll send you the return, but they won't send you the Schedule C that shows the losses, or they won't show you the Schedule A that shows all the medical expenses and all of the gifts to charity and stuff like that. That either brings your AGI down, the Schedule C, or brings your taxable income down, the Schedule A, because that moves you from standard deduction to itemized deductions. So all you know is you're getting a huge return and you're good with it, again, until the 5 to 10 people that I got to go down to the IRS every year for, to go and help them explain how they had no idea that this person filed that return. And again, if you read the article today that was sent, that was exactly, it kind of walks you through exactly the type of things that I see. I see people come in here, they have fake businesses or businesses with huge losses. I've actually seen people with fuel credits. How would you get fuel credits? And I've actually sat in the IRS and they're like, this is disallowed. And they're like, what is that? And they're like, fuel credits. And they're like, what are you talking about? And I'm like, yeah, the person actually gave you fuel credits. So again, the red flags, if somebody's saying they can get you a huge return, the best return you ever got, you should be leery. If somebody says, I'm only going to charge you 10 to 15% of whatever I get you, again, that should be a warning sign. That should be a red flag. And if they will not show you and walk you through the return before they file it, again, I've actually seen that. Again, that should be a red flag. And lastly, when you get the return, if they give it to you and it says self-prepared instead of all their information, their PTIN number, their EIN number, the name of their business, CPA numbers, all that good stuff, if all that stuff is not on there, you should be very worried, because this is somebody who's just doing taxes on the side. So as tax season is coming around and you're getting ready to go get your taxes done, and your friend has referred you to somebody in the neighborhood, Shade Tree Tax Preparer, who is running around telling everybody they're hooking everybody up and getting everybody these huge returns, we're out here shoplifting. That's all I'm going to say. You're out here shoplifting. You're good till you get caught. That's all I have.
All right. Thanks, everyone. Thank you, Eric. Oh, this has been great. I learned a lot of stuff that I thought I knew. So thank you, Eric. I really appreciate it. Thank you, everyone, for tuning in for Master Your Money with Eric Anderson. We're here Tuesdays at 7 p.m. And today was Thursday because we had profit sessions, if those of you are familiar with profit sessions. But we are doing a Tuesday, so we just decided to add a Thursday for this week. But normally it's Tuesdays at 7 p.m. We'll be right here. Also be here on Facebook and on YouTube as well. Please subscribe to the YouTube channel. If you have not, please do so. We have a lot of clips and a lot of different other information that Eric was going to be releasing here soon. So please subscribe to that channel. Eric, you had any final things?
That'll be it. I appreciate everybody coming. I can see by the chat, it looks like there was a lot of stuff that we missed. We're up to like 60 comments. I'm assuming those are like questions and like that. So I really appreciate everybody taking the time to come out and sit with us and listen to me rant, basically. But I really appreciate everybody who's coming on as we're growing. I hope that things that I'm saying are really helping people that have different types of questions, different types of concerns, and things like that. And I look forward to keep moving forward. And I can't wait to see everybody on Tuesday.
All right. See everybody Tuesday. All right.